Hello, and welcome to the AlphaMint Morning Show.
He waited again until 9:30 to start the jackhammering. He closed the window.
Oh, I could barely hear it. You're fine. You're fine.
No, last time the audience said they could barely hear it too, but it's crazy because it's so loud in my head. I lose my train of thought while I'm talking, but I closed the window. It's better now. But I'm always impressed with how good like the mics on the phone or the computer are with only picking up voice.
Yeah,
they're really good. Like
the noise suppression software is pretty incredible.
So much better than it used to be. Like I always think people, the only thing that can break through that software is my dog snoring. That is the one element of nature that somehow breaks through that.
It seems to pick it up as your sounds. So I don't know. Maybe it's,
I guess we have the same frequency. It's the only explanation.
Could be, yeah. No, even the noise suppression stuff on Discord is pretty outstanding now for sure. So
yeah. Discord's always been good. Because you could see like the little bubble whether it goes green or not, and I'm like, didn't even turn it green. Good stuff. I'd actually say Restream's the most sensitive. I've noticed that it likes to pick up more than usual, but it's still pretty good.
Like I said, I'm amazed that you guys can't hear my air conditioner, considering it's like right beside it. Other than like it's not directly blowing on the mic, you might get that wind sound, which is fucking terrible. But yeah, GM,
Yella BB,
Tuesday, June 28th, episode 144. Forgot to update the title. Bored Apes already struck back. I'm not talking about that today. I don't think.
No, I can't talk about that anymore.
Yeah, you hate it.
I hate all of it. And I had to talk about it. Well, we didn't talk about it on the morning squeeze. I was impressed. Somehow
you didn't?
It was brought up. I'm sure it'll be brought up today. Yeah, nobody brought it up yesterday. I think somebody on the squeeze may have owned one, so they don't want to offend anybody. You know, this is always the tough part, right? Like you have these scumbags who make projects, and then you have these innocent.
Here we are talking about it,
right? Then you have these innocent people who. Oh no, I'm talking about.
I know.
Zooming out the overall phenomenon. I won't acknowledge the actual issue, but I will tell you that friends of yours, loved ones who just aren't necessarily in the same news cycle as you or hang out with the same people, they may buy into these things, whether it's a fishy fam or a Rider Rips collection, a funk, whatever it is, right? And you feel a little bad. You don't want to make it, you're not dumb for having bought into something that wasn't what you thought it was. And but you want to say some pretty harsh things when people do stuff like this. Like you want to make a point about it. And that's one reason I hate talking about it, because I would like to say what I think. I also don't want to make people feel bad, but you shouldn't feel bad. I've bought stupid fucking things too that end up being not what I think it is. If someone tells me, I may feel bad in the moment, but if they're right, I mean, it's just, can't fault yourself making a stupid buy now and again. Just don't dig your heels in on stuff that you don't have the utmost conviction in. Like
that's totally fair too, because sometimes people will in the face of overwhelming evidence just like no, yeah, no, it's good, or like but it's right there for you, right? It's not even speculative.
And I'm a big proponent of digging your heels. To me, it's the most important quality a trader can have is knowing when to dig his heels. And the problem is, if you just do it for every egoic battle because, well, I bought this thing, so it's mine now, and I have to defend the tribe, it's going to kill you in the long run. And it just, it doesn't make you look good. So
I dug my heels in on a lot of stupid shit.
Yeah.
Altcoins from 2018. Despite everything going down, could have traded for some very nice ratios in ETH. But of course, ETH stopped going down and the other ones kept going down. And then you realize that, like, I don't know, hindsight's 2020. And, you know, if you really do have real conviction in something, it's fine. And you're not going to be right 100% of the time. But there was like a dozen altcoins that I had were like, this one's going to be great. This one's going to be great. Now I'm like, I should have known most of those were not going to be great.
Well, you know,
in fact, none of them were.
Warren Buffett said something a long time ago that was so profound to me. And he said, if I told any guy graduating Wharton or Harvard that he could only make 3 investments in his lifetime, okay, he guarantees that person would be a millionaire. And you know why? Because they would think really hard before they made any investment, right? And I will tell you that when I've made the best trades in my life, I knew ahead of time. I don't know why. I don't know how. There was this gut feeling, visceral reaction of this is going to work. This is the thing I need to go towards. And nothing could shake me from that path. Those are the investments that are going to change your life. The problem is we take the other 6,000 plays in between.
Yeah.
And then it doesn't matter how good that one conviction play you had was, because these 6 other stupid trades you did in between, fuck you. So,
and the reasons why are really important too. And that's where I think, like, poker is such a good training mechanism for understanding that you can make a really bad move and still have it pay off. But that doesn't mean that you should do it every time, right?
Right.
Like, that's why lots of people play poker and not just hardcore people, because the everyman can win every once in a while by doing stupid stuff, but just running good, right?
Right.
But it's important to be able to step back from poker, your trades, your investments, all of that stuff, and be like, you know, did I get the reasons why right? You know, like if you just fall ass backwards,
well,
and I'm not saying you do, but if you just fall ass backwards into a great trade, but you did it for the wrong reasons, you are going to apply those wrong reasons to things that aren't going to be good trades. You know,
you have 2 tools as a trader. Okay, that's math and gut. Those are the 2 things that you can work with. When they line up together, those are your best trades. And it's rare. You'd be surprised how rare it is, right? You have your very high conviction trades, you have your high probability trades, and then you have your gambles, all right? High probability trades are the ones you're going to get most of the time. But, you know, like, it's still math, it's still numbers. It's not going to work 30% of the time. And it's all about how well you structure your risks to make sure that you're profiting off the 70% and cutting your losses as quick as possible on the 30. That's your probability. When it comes to your gut, this is I constantly study and try to think, what is gut, right? Is it like this psychic, esoteric thing we can't touch? Or is our brain taking in variables and subconscious cues?
All of the things.
Yeah.
It's the amalgamation of everything you've learned up into that point, whether you even consciously learned it or not.
Exactly.
Right?
So when those things line up, those trades tend to be money. Like, I haven't kept the percentage, but it's like, I can't remember all my trades, but I remember those. Like, I don't remember the rise up or even necessarily the reward. I remember the feeling before I made the trade. I remember just knowing, like, you know. And if, the best thing I think any trader could do is try to cut out as many trades as possible per year. Like, most of the trades you're going to make over the year are, even if they worked out, they're not good because they're not your high probability, high conviction trades. So trading less is a common thing you hear people talk about all the time, but that's really what it is. It's that if you just throw a huge line at those things that are high probability and high conviction, and stay away as much as possible from the things that are just high probability or gamble, you will see your entire trading career turn around seemingly overnight.
A lot of these strategies is it's not that you don't get winners, it's how often do you avoid losers too, or how often do you avoid losing?
And it's how you play them too. You got to understand, human beings, our instincts, our fight and flight instincts are what causes us to hold losers to zero and sell winners before they make you money. You will see, because you hold things to zero, you have PTSD, and the second something doubles or triples, you want to sell it. But because you didn't let that thing run 10x or 20x or whatever it was supposed to do, now those losses outpace what your winnings were, because you didn't.
And that's we've talked about this so many times on the show. Of like, it's great to get that 50% gain, 2x gain, but how often are you deploying capital such that you need those to cover all of your losers? Well, the great traders can make bank off 50% and 2x trades, 3x trades. These, like, you know, in the NFT world, those are kind of like hitting singles and doubles, right? But they don't take swings at the shit. They're not losing a lot. But if you are just going after every single mint, free or not, because I mean the gas is actually getting pretty good now, but or like all of these things, and they go to zero, like you have to cover all of that with your winnings. And the more things that you invest in that go to zero or drop substantially, the more outsized those wins have to be. That's the venture capitalist thing, right? They put money into 100 companies expecting one to be their 1,000x so they can make 10x on their entire portfolio.
And it's
they don't
not
want 2x.
The problem is it's why I genuinely hate when the term that all I hear on Twitter and in Discord, well, profit is profit. I saw profit is profit. Profit is profit. Yet none of these profit is profit people are millionaires. Have you noticed that? Okay.
And that's not to say don't sell like marry your bags till they go 100x, but like you gotta make position sizes such that you can de-risk out of a thing and still have a bag to hold.
It means have less bags, but the ones you do hold longer. Okay. And I will give you 2 secrets to risk management. And I bet if you look at your trading history, you'll say, wow, I kind of do the opposite of that. And don't fault yourself. Not only did I used to do the opposite regularly, I still do the opposite sometimes because I'm human. All right. And this is what trading is. It's a journey of learning your humanness, right? You're learning how you're going to react, because trading, the numbers you look at on the screen are fine, but then all of a sudden your wife leaves you, or this family member dies, or this bill comes up, and now while you're trading, you're thinking about these things. All of a sudden your thought process is interrupted by other things. This is really a journey of knowing you, right? It's about knowing yourself. So here's 2 risk management strategies, okay? Instead of averaging down, this is something you see all the time. Losers average down losers. Instead of placing a big bet, and then if it goes against you, adding more to lower your cost, place a small bet. Then if it starts going your way, add more. If it goes against you 10%, cut your losses, period. I don't care what it is or what the reason. If it goes 10% against you, cut the loss. Remember, you could always get back in. There's nothing saying you can't get back in. And even if you get back in a little higher, at least you know that your thesis is being confirmed now versus gambling that, well, I'll just hold it and see if it turns around and goes up. That is risk management. Cut your losses as early as possible. And when you see winners, when you see you're up 50 or 100%, don't sell and run, add to it, okay? And again, this isn't a blanket statement, all right? And NFTs are different, but look back at your history. And in general, do not average down your losers and take your losses as quick as 10%. If a stock, if an option, if something goes against you by 10%, get out. Doesn't matter. Even if it turns around and goes up, who the fuck cares? It's the era of opportunity cost. There's going to be 10 more plays tomorrow that you're going to be able to do. So cut your losses as quick as possible. Let your winners run, and it will improve your trading dramatically.
And I would say also, like, keep score with yourself a little bit too. Confirmation bias is such a powerful thing, right? It's so easy to do something that you don't feel good about, and then when it breaks the way that you were thinking, like for instance, you're gonna say you minted something for 0.1, it goes up to 0.5, and you're like, oh, I'm gonna sell it here, but like I really think it's gonna go higher, right? Write that down and keep score. Keep track of every time that it actually continues to go up versus you made the right, because we have such a bad habit of only focusing on the things that we feel like we know we should have done, but not actually giving ourselves credit for the times that we make the right decisions, right? And you might find that a lot of those times you actually made the right decisions, but they just don't stick in your brain the same way as missed opportunity does. And we also have a way of not, if you sold and it doesn't go fuck, what am I saying? Just keep score. I promise you, you'll find out. And the other thing is too, you might find that maybe you should be trusting your gut more, right? When you have that feeling of, oh, I really think this is going higher, because that is your brain absorbing everything else that's ever happened to you, and it will become right more percent of the time. And I'm not saying it's gonna, go from 50% to 90%. Like, that's not realistic, but you got to remember, a 50% success rate to a 60% success rate is actually it's actually 20% more, not 10, right? Like, you'll be right 20% more and you'll be less wrong the other 20%.
Yep.
I started throwing numbers out there, and then I remember that you're not supposed to do mental math live. So I started getting hung up. But, the jump from 1% to 2% is actually 100%, right? A lot of people, oh, it's only 1%. No. If your success rate goes from 1% to 2%, you've doubled. 2 to 4, you've doubled. 50 to 75%, like the people that are right 60% of the time versus the people that are right 52% of the time, they make way more fucking money. way more. So just incremental improvements, learning to trust yourself in the right spots, but keep score. Write it down, keep it in a spreadsheet. Every time you make an action, check back in a day, a week, a month, a year, if you really want to be that committed to it, and see where that action could have been if you had done the opposite. And I think you'll find that a lot of times you might have been more right than you thought you were, but you just don't check back on the winners. You always just check back on the losers. All those people that bought Bored Apes at 1 ETH and sold it at 10 ETH, like, full of cope, right? Full of cope. And they're going to hold on to that probably for fucking ever. But there's probably been a ton of times they made the right trade, and they're not counterbalancing that, that cope with, like, I've done it right the other 100 times. Like, I gotta, just be happy with some things.
Yep.
That's what I would do too. I think, you see that in poker again, to go back to that all the times, always the bad beats. People just remember the negative, right? You got to celebrate the positive too.
Well, after yesterday's bear trap, which we called on the show and I tweeted about
Yes, let's get into
it. We weren't down a lot yesterday, but you could see the old, oh man, every rally is sold, it's gonna blah, blah. As we came after having a crazy week last week where markets finally seemed to find some footing, we come in on Monday and things are down a bit. We were down a bit in Asia, crypto specifically taking a leg down. Right to important support, by the way. I talked about 1180 so much last week because I ain't shitting you. That's the most important number in all of crypto right now is 1180. Because if ETH stays under that, it's going back to the lows. If it stays above, I do think we get a very nice short squeeze here. And so far, after a couple tests, we did briefly go under 1180 a couple times, but we were quickly bought up. We have held. We're at 1230 right now on ETH. Markets are rallying today. Very, very much looks like could be a trend update. We just made new highs on the S&P. We're at 3940. that magical 4,000 level, just mental. Get us back above 4,000. Give us some semblance of order. Here, we're going to see if we can close that out towards the end of the day. We're right at a critical part right now. Around 10 a.m., you have the opening bell shenanigans. As I said yesterday, professionals never trade the opening bell. You know, it's all market makers, algos, and all sorts of shit trading right now. They tend to trade in the last hour of the day. After 3 p.m. is when they make their big buys and stuff. So we're watching right now. If we maintain this rise here over the next 30 minutes, I think it'll be a trend up day, and we're going to close higher than we are right now. We'll probably continue going up. I think the market is severely offsides here, and I mean the players in the market. I have been talking about inflation peaking for 2 months, and I probably looked pretty stupid when an 8.6% print showed up as a headline, and everyone was throwing it around. Oh, look at this. But I have kept saying that these numbers are looking back, okay? These are backwards looking numbers. And if you look at either longer term trends or more immediate data, inflation peaked. It peaked already. And if you go look right now at your gas prices, they're already starting to fall. I know it's not making a material difference to you, but we're trying to find the reversal here to see if there can be some relief for risk assets. And the Fed was forced to do something very extreme right when things were getting better. I think they have gone from what is perceived as behind the curve to what is actually ahead of the curve. And why are we going to get such a violent snapback? In my opinion, anything could happen, but why are we going to get this violent snapback? It's because the Fed is going to actually now go, oh shit, have we gone too far? Are we killing demand needlessly right now? As we know, they can't affect supply, which is the root cause of our issues right now. They can only affect demand, okay? Is it right to continue killing demand here, even if inflation has cooled off? Hell fucking no, okay? But there's a lot of politics involved right now. We have a huge midterm election coming up in this country, which has become even more divisive after the Supreme Court decision over the last day. Both sides are going to be using inflation as a political football to get their points across. And I mean, this is a lot of pressure on the Fed. These are appointed positions. They can be fired. They can be removed. There's no election involved here. This is a very, you know, the Fed, a lot of people think the president's the most powerful person in the world. I would argue it is the Fed chief. That would be Jerome Powell right now, but he's in a tough spot. There's a lot of forces working against him. I do believe the man will do what is right for the country in the end, regardless of politics. And I expect the Fed language to start becoming more dovish here. We're going to have some big inflation numbers coming out over the next 4 weeks. I think they are going to surprise us. I could be wrong, and if I am, we're probably going back to the low. But I have been bullish on this S&P 500 since 3,600 and ETH since 900. So I've got a cushion to work with, and I'm going to go with my gut here. And if I'm wrong, we could reassess. But I do think we are gearing up for quite the counter rally. And I have gotten myself so bullish over the last couple days, I'm really starting to think if we can make new highs this year. I don't even want to say it out loud. It's so fucking crazy right now. It'd be such a jinx. Everyone would be like, what are you fucking talking?
Okay, well,
the whole thing.
This is why it's not. I know the macro backdrop substantially different than the last time we did this, and we did not go down to 900 the last time that we did this. But let's pull back just a little bit here and go back to July. Nope. We got to go back further. There we go. No, okay. So yeah, we went a lot lower, but we also went a lot higher too, right? We made all-time highs back in May 2021. So what are we going back about 14 months ago? That was an all-time high right there. Real sharp crash down, a lot of volatility. bottomed out twice at around 1,800. Then sharp climb back up, and then we almost hit that 5,000 mark. This has been a little bit more drawn out. Obviously, it went lower too as we breached into those 3-digit numbers. But I mean, recoveries like this happen. Like, look how violently that went up. Look how violently it recovered back up to over 3,000. I mean, even 34,000 was not far away, right?
I'm glad you brought this up. I'd like you to. I DM'd you an article by one of my favorite media person, and I think if you're in crypto, you may feel the opposite, but I believe Joe Weisenthal is one of the best minds in economics. He happens to be a journalist who works at Bloomberg. He used to work at Business Insider. Read that out for me, my friend. I think this is a great thing for everyone.
You want me to read the whole thing there? I can.
The whole thing. It's a very, very smart and poignant article, but then I'm going to refute it. So go ahead.
All right. Pull up a chair, guys. I'm about to get my read on. Joe Weisenthal, where will the leverage come in? Where will the leverage in crypto come from now? So basically, anyone involved in lending got absolutely torched over the last few weeks. Totally true. So where does the new buying power come from? From today's newsletter. Subscribe here at Bloomberg. Let's make this bigger. The big losers in crypto's recent downturn are the lenders, whether it's consumer-facing apps like Celsius or various institutional trading desks. Numerous players who were in the business of lending out crypto have gotten torched. The implosion of the hedge fund Three Arrows Capital has clobbered a wide swath of the market, owing to a combination of its size and its perceived safety as a borrower. My colleagues Emily Nicole and Olga Karif wrote yesterday about how the huge crypto bull market from early 2020 to late 2021 was fueled in part by this massive leverage. Long-oriented speculators had a huge need for dollar liquidity to amplify their bets, and this liquidity was sourced by the juicy yields that have been offered on the various CeFi or DeFi platforms. So now a bunch of lenders have been crushed or wiped out. It's hard to imagine there are many people in the mood to post their coins to an app to earn a few extra percent in the yield these days. And for the institutional desks, after getting crushed by 3AC, future borrowers will almost certainly have to pay more for leverage and post more collateral. Who's going to give out cheap, unsecured lending in this environment with possible future 3ACs out there? The question then for bull is, where do the big dollars come from? Sure, there's all the supposed institutional money on the sidelines, but now there's reputational risk. I love talking about reputational risk, by the way. And bulls can't get as much leverage. And a bunch of retail dollars just got eviscerated. Oh, and there's inevitably going to be a lawsuit season with folks hoping to recover something out of the wreckage. If the macro mood were to change, it seems plausible that crypto could find a bottom or stop falling fast. But for the whole space to efficiently hoover up dollars again, as it did in 2021, might prove tough given all of the recent damage.
Okay. This is very, very well thought out, and it actually speaks to a point I've been making for 3 weeks, that everyone keeps trying to read retail sentiment on Twitter, like, oh, there's still people bullish on NFTs, or oh, there's still people, but retail was wiped out long ago. They are a non-factor in whether crypto is going to bottom or rally here. Retail money is fucking nothing. It is nothing compared to this institutional money and the leverage that has been there. I have been saying, we are not working off retail froth. We are working off VC froth, over-leveraged VC froth. And that is very evident. This is true. This is exactly what's happening now. He's also correct that we can't have that easy up-only bull market environment as we currently are without that type of lending. He's absolutely right. If you just take what he's saying at face value here, that's kind of scary. It's true. We could bottom, but where would the bull come from? There's no more happy, funny, ha-ha, free money times, right? Well, he buries the lead and actually says it right there in the article. Institutional money. Okay, the next leg in this market is coming from institutional money. Now, it's going to be different, it's going to be slower, and it's going to come to different places. The Ponzi cycle, as you know it, is effectively dead. okay? Because when institutional money flows, it's not flowing into Yam Coin, okay?
It's
gonna
not?
flow, right. It's gonna flow into things like Uniswap and Curve. I mean, this is why I've been so bullish on something like Curve DAO, okay? I think huge institutional money is gonna flow into things like Uniswap and Curve DAO. Now, what's holding back this gigantic tsunami that's about to come is regulation. I mean, you're not going to get the Goldman Sachs prop desk buying these things openly until we have real clear signal from the government that they're not going to get in trouble for doing it. Okay.
I can't wait to get the headline: Goldman Sachs puts 500 mil into cum rocket.
Well, and thank you, Mr. Sam. This is the great revelation now. Everybody is crying about the Ponzi cycles are over. The easy money is gone. Crypto is not going to be what it used to be. Blah, blah, blah. But guess what we just did? We turned regulation from the most bearish thing that could happen to the industry to the most bullish thing that could happen to the industry. Exactly what Mr. Sandman is saying is correct. We are not even going to need the institutional money to start coming in physically. All we need are signals from the government that they're going to lay down real regulation that allows the trillions, not billions, the trillions sitting in pension funds, retirement funds, teacher funds, all that money, the real money that moves markets. Once that's given the green light to come in, people are going to front run it. So people are going to start front running the fact that money is coming in before it even comes in. And then when it comes in, whoo, that's going to be that's the blow off top. That's the 1999 NASDAQ insano 4 years up only cycle that everyone's into, that super cycle everyone's anticipating. That's when it's going to come. So
yeah, and retail money was able to take Bitcoin from pennies or fractions of a penny to thousands of dollars, especially because, you know, the supply of Bitcoin is not incredibly high. In market cap terms, a couple billion, 100 billion, not that big of a deal. But when you start to talk about the trillions, it's an institutional investment time. Though that's the money that takes things into a new paradigm. And I'm sorry to say, there are going to be tons of opportunities for you to get a 10x, 100x. There's definitely going to be, we're going to see some more 1000x opportunities. But for the big, more, I don't want to say sure bets, but for the surer bets like Ethereum and Bitcoin, the time for 1000x, the time for 100x, I mean, it's over. If you're long here, you absolutely could see a 10x, a 20x over a long period of time, but it doesn't happen without the big money coming in, and that requires regulation. They have to be able to do it legally, properly, without getting, into a lot of trouble doing so, right?
Yeah. I mean, the real money is going to be made buying the things built on these networks, not the networks themselves.
100%. You're going to find tons of opportunity to outperform Bitcoin.
There'll be 10,000 X's. There'll be 100,000 X's. So, I mean, don't worry. This is the new. Nothing has changed about Web3's potential. It's about growing. I mean, the internet's been around since the 80s.
Yeah,
okay?
I love that because you're absolutely right. Other than price, what has changed about anything that we've talked about in the last 12 months?
Nothing
has fucking changed.
The thing is, price is great confirmation bias. It's great, like, oh, I must be right. Look at this number just going up every day. I must be right in everything I'm thinking. Then number go down, and you start to question the things you really believe. All right, you have to separate your P&L from the philosophy, and the philosophy is where you can find the conviction to hold through these type of moments. Right? Is this one of your high conviction thoughts? And I mean, we talk about that, right? Crypto at large, if you're listening to this show, is probably the high conviction play of your lifetime. This is what you think it is, right? So I don't think any of that's changed. I think we have a rosier outlook now. Getting all this chaff and all these Ponzi's, as fun as it was and as easy as it could have been for some people to make those millions, you're going to have a much, much better market on the other side of this. It could take a little time. I think that's, it could take time. That said, I think ETH is very undervalued here. It should pop to 2,000 and go sideways for 2 years if that's what it's going to do. So I think these things will happen a lot quicker than we thought. I want to also point out Mr. Sandman just coming with the alpha today, because this is something I've talked about before too. Gary Gensler literally taught a course on digital assets at MIT. It's funny because he comes out acting, he's not acting ignorant, but he certainly plays into kind of the party lines of politicians. Like, he says things where you go, really? You taught a course about this shit, but you're going to say that? Well, don't forget, he has to play nice and convince people who actually do think that way to come to a different type of thinking. So that's going to require him to both say some things that we don't like and say some things that we like. Not that I think Gary Gensler is any friend to crypto. Everybody's out for themselves. So if he thinks he can make his bag being against it versus being for it, I'm sure he'll do that. I don't put it past anyone to put their morals above their profits. Not that he wouldn't. I'm just not going to bet that he won't. I know human beings. So I am not.
The worst way to convince somebody is to be trying to convince them.
Right. So I am not a fan of Gary Gensler, but I am confident that he knows what he's talking about, even if he says some things that may be politically charged at times versus what he actually thinks. I think we all do that, especially if we're in a public environment where politics is important, because you have to work with. It's all about, you have to work with people. Like everyone, the great debate in society: should you be honest and stand up and just say what you think, or should you try to work with the other side, make some concessions, say that, well, maybe I don't know everything, and try to actually get shit done? I mean, I don't know what's right. There's two camps on this thought, but I really think regulation is going to be the next buying opportunity in this market, because I don't know, let's say we get up to 2K here over the next couple months. Everything looks beautiful. Everything looks great. All the liquidations are done. The leverage is out and crypto feels okay again. Then the government announces regulation. The knee-jerk reaction is going to be to sell everything, because that's just what we're programmed to do at this point when we hear the word regulation. After a few days or weeks, as people go, wait a minute, regulation's what we want because it's going to bring trillions of dollars of institutional money in, it's going to start ramping the other way. So I think the announcement of regulation is going to be the next great buying opportunity in crypto, besides the one we're in right now. Go buy ETH at 1,200. Come on, NFX.
I was actually just listening to a really fascinating topic on a podcast about the money in the market. This might not come as a surprise, but the most inefficient money in the market is retail casual traders. That really, every time they make a move, it's typically a negative EV move, right? And the very positive EV moves is a small group of retail traders, very, very small group of retail traders, and institutional money, right? So this is all that big, big money. When you know that institutions are starting to buy, who do you think they're buying from?
Me.
You specifically. The retail traders. When institutions start selling, who do you think they're selling to? It's not other institutions. It's the retail traders. So when all of these guys are telling you, like, oh, we're starting to get in, we're starting to look for it, we want regulation so that we can start buying this. Like, they are buying from the people that have been panic selling all this time.
Yeah.
And they're going to sell it maybe at a top, maybe not the next top, but this is where all the money flows. These institutions are big institutions for a reason, because they're fucking good at it. And all of this news that we've talked about on the show for the past 2 months, while crypto has just been bottoming out, is big institutions, huge companies still investing in Web3, naming stadiums, signing athletes, investing in this, opening up trading desks, hiring a team.
And you know,
These are big. Sorry, what last thing? They're big money because they've been really fucking successful for a long period of time, and it's not stopping now. Oh, sorry.
And these guys are playing a very, very different game than you are. And we talk about it in a way where it's like, well, they're coming out and telling you to sell when they're buying. Well, they're not doing that to trick you. They're doing that to trick their competitor. They don't get, again, they do not give a fuck about you. There's this trope that it's like retail versus the large investors, blah, blah. That ain't it. It's them versus them. They're not playing you. They're playing the other hedge funds out there. And if they don't pretend they're selling when they're buying, they're not going to make any money. It's impossible. They have to feign. They have to bluff. It is poker. When you are playing at that level, it's poker. The rest of us, we're rent seekers. Okay, we are trying to seek rent off of their large moves. We're not doing anything ourselves. We don't affect. There's nothing for us to bluff with. We don't have stacks big enough to bluff. We're trying to figure out what they're doing. So it's not some game they're playing with retail or some conspiracy that they're coming on CNBC to trick you into selling when they're da-da-da. It's the game they have to play or they're not going to make a profit. So recognize what these large institutions are doing and how they would think. Okay, just put yourself in their shoes and pretend you're playing poker, and you'll understand the macro game much more. Remember, the big money is played in macro. It's the only place you can play billions and trillions of dollars. Picking a stock doesn't mean anything when you're working with trillions. There's not enough. Apple isn't big enough when you're working with trillions. You need to have much larger markets. That's why bond markets are so big. That's why alternative asset markets are so. These guys are playing such a different game, and understanding that is going to allow you to have a better macro playbook. That's why I get so frustrated right now with everybody calling for a recession. It's not even whether we're in one or whether we can get. Look at the data. We're not even close to a recession. Not even close. It makes the only reason people are talking about a recession is because the Fed is raising interest rates and inflation is high. That's fine. Those things have caused recessions, but look at the data. It's just not doing it this time, period.
I got to pull up this article just because it does kind of correlate to what you're saying. Not specifically about crypto, but obviously Coinbase might as well be crypto on the stock market. Goldman Sachs downgrades Coinbase shares, predicts 60% revenue decline. America's biggest crypto exchange laying off 18% of its workforce. A Goldman analyst said that's not enough. This is, it's interesting because, Goldman is incredibly bullish on Coinbase. I think you said they had a price target of, $430 or something, and now they've just downgraded it to, $45?
Their initial price target was $375. They've been chasing it down the whole time. Their last price target was $70, and they just lowered it to $45. The analyst game on Wall Street is an interesting one, and it too is a game of poker that is should not be taken at face.
I want to ask this question, but I know the answer to it. They're not required to release these findings, correct?
Required to release findings? What do you mean?
Like they're doing analysis on all kinds of different stocks and all different companies and whatnot. Like they don't have to legally release that they're downgrading Coinbase shares or anything, do they? Like, is that like a thing?
Yes. There are a lot of regulations around how upgrades and downgrades occur. They are accompanied by reports for the reasons and justifications for these upgrades and downgrades. The thing that you have to think about is that these large banks have prop trading desks that are buying and selling stocks that are separate from their analyst department, nor is either department required to speak or listen to each other. Okay? That means that they could be telling you to downgrade a stock while that means they could be telling you they are downgrading and you should sell while the prop desk is buying.
Right.
Legally, they're not supposed to be talking to each other. That's legally. So you just have to understand.
The little laugh there says it all. Don't worry.
Yeah, you have to understand that the research departments where the analysts come up with these reports are completely separate from what the actual money in this bank is doing. Money talks, bullshit walks, right? And analyst reports, they're actually valuable. They are valuable as research. They are not valuable as predictive tools or as ways that you should be buying and selling stocks. All these analysts do fabulous research, never listen to what they take from that research. Whatever they've extrapolated from it, throw it out the window. Just read the reason. All the research, fabulous. These guys know what they're doing. But these guys will downgrade stocks at the bottom and upgrade stocks at the top. It's the nature of what they do, right? Because an analyst is looking, again, at backwards information. They are looking at the quarter that has happened. And then they are taking things from consultants, okay? Large data companies that go out and do surveys. Like they'll send someone to an Apple store and they'll ask 100 people in each Apple store which iPhone they're buying. And then all of a sudden you get a report that says Gartman predicts this many iPhones will be sold. And the analyst takes that and rectifies it with the last quarter's business filings and tries to make an extrapolation from it. They are wrong as much or more often as they are right. Listening to that part of it is pointless. But the research they're doing is very valuable. I mean, these guys know exactly what is... these guys know exactly how to break down balance sheets and shit like that. So just take the predictions with a grain of salt. And if you really know what you're doing, look for those down. Like right now, I'm in a position where I think markets have bottomed, okay? But I'm constantly looking for signs to confirm that, because you gotta look at reality and adjust to what's happening. And if something changes, I could turn on a dime. I could come in tomorrow and be bearish all of a sudden. I mean, because I'm saying things and because I have a thought process and a plan, doesn't mean it can't change instantly. This is trading, okay? Anything could happen in a moment that changes my thesis. So but if you understand how, like, I think it's bottoming right now. Coinbase had a huge flush off a liquidation event. Then Goldman Sachs with a very suspicious downgrade towards the bottom. That's the type of downgrade I buy. That's the type of downgrade I fade, okay? Now, had you faded any other downgrade on the way down, you would have been fucked. This one, because I have these other variables that are making me think a bottom is in, this is just another thing that confirms that for me. So I really think Coinbase is a buy here, and it is up a few percent now. That's crazy. This market, I'll tell you. It is not up a few percent. I have now after ranting for 30 minutes. I have now tuned into the market, and we've given back a little bit off the highs. Just at 10 a.m. when I said whether we were going to decide whether this is a trend up day or something else. So let's see. I would be
2021 revenue for Coinbase, $7.8 billion. And with the way things were trading on like the earnings models, like 20x for tech stocks or whatever, I mean, that's a fucking $160 billion company sitting at 12 billion right now. Like, I don't think that they're going to trade at those.
You would just
profit. I got to imagine that their margins are pretty juicy though.
You can do 5x
revenue.
5x revenue.
Yeah, I got to imagine that their margins are pretty juicy though, eh?
Their margins are juicy, and even at a 5x, that would be a $60 billion company, and they're at 12 billion right now. So, $250 a share feels pretty fair to me right here. Yeah.
And we're gonna have a year in the future where that $7.8 billion revenue looks fucking tiny for a company like Coinbase, provided they, continue their relative market dominance, I guess.
So here is where I am very bullish right now. That would be NASDAQ high beta tech. That'd be biotechnology. If you want to get in on biotech, look at XBI. It's the ETF for biotech. Those two areas of the market, I think, have bottomed no matter what the index is doing. Remember, the indexes are used for hedging. The indexes are used to protect very large positions on the books of hedge funds where they can't go selling the individual stock, but if they short the index against it, they've created a delta neutral hedge, depending on how much that they've done. So you're going to see them do that to protect positions right now. Yet I think things like Carvana, Shopify, Tesla, Netflix, Square, Zoom, Coinbase, even Peloton, which sounds disgusting even coming out of my mouth. I think Peloton is a buy here. That's more of a mean reversion play. I would not put Peloton.
I'm curious though. Do you think these? I think some of these subscription model businesses are going to start taking a beating. I think people are getting subscriptioned out.
Oh, I am very bearish.
I actually just canceled a shitload of subscriptions that I had too because I was like, why am I paying for all of this every month? Like, what the fuck? Sorry.
I'm extremely bearish on Peloton's current business model. What I think is going to happen there is they're going to fire the executive team, bring in some sort of corporate raider restructuring guy who's going to be able to like turn it into a $30 or $40 stock. Then they're going to bankrupt it. So because it's selling at $10 right now, I think it's a free 3 or 4x. Do I like Peloton, the company? No, it's stupid as junk.
Well, and here's where I get hung up. Like, there was a point last year where I actually considered buying a Peloton. Glad I didn't. I signed up for a gym instead. It's a small private gym, not crowded at all. Actually quite nice. It has Peloton bikes there that you use. And my gym membership is cheaper than the Peloton subscription.
Yes.
I don't know. To me, as soon as I saw that, I'm like, I'm not very bullish on that company anymore.
No, there are many reasons to be bearish on Peloton, and I agree. Look, I do not like the company. This is a complete mean reversion play of market size.
Gotcha. No, I get it for sure. Faux show. Apparently, Cathie Wood is bullish on NFTs. Digital property rights represented by NFTs are going to become incredibly important.
Who said what?
Cathie Wood.
What'd she say?
Digital property rights represented by NFTs are going to become incredibly important.
Correct.
We still like Cathie Wood. People don't like Cathie Woods anymore. They love you when you're up.
You know what's funny? They never liked her. This is what really? Yeah.
I thought she was like the new like
the media liked her. The media liked her. Yeah. That caused the market to hate her even more. That caused Wall Street to hate her even more. Because again, most of the old white dudes on Wall Street, they hate tech. It's just not their thing. It's all high PE ratios and it's all going to come crashing down and it's inflated and it's meme stocks and it's Gen Z and it's LGBT. It all turns into a culture war. It has nothing to do with anything except the culture war that is raging in the Western world between the libs and the conservatives and who wants to live this way. And that it really is what it could. The hate for Cathie Woods is that she is a woman who invests in things that libs like. That is why people hate Cathie Wood. And she was hated all the way up. And she's hated even more on the way down because now the media has turned on her as well and people want to dance on her grave. I believe ARK is going to survive. It is an ETF of the exact stocks that I think have bottomed. Period. I think all these stocks have bottomed. I'll wait to see if I'm wrong. The portfolio I just rotated clients into was from natural gas and old man stocks into Carvana, Shopify, Tesla, Netflix, Square. These are high beta, risky companies, especially in this environment. And wow, the market's going down even more. What happened? It twisted an ankle, R2.
Well, on that note, we got to go. Actually, yeah, we're sitting at about an hour, so we could probably start to wrap this up. I had a couple news articles that we did. You know what? This was a great show because this whole conversation organically started from the fifth minute of us just talking, and kind of just kept going. Obviously, didn't touch on NFTs very much today, but I'm not gonna lie to you, not a lot going on there right now.
One final note: 000.eth.
Yes,
130 ETH bid on it that is yet to be accepted. It's been a bidding war all night. Started at 50, went to 100, then to 130. There's 2 people bidding for it. Have I mentioned how bullish I am on ENS? If buying ENS names is too complicated for you, buy the fucking coin. This thing's going to be a cook over the next few years. It is not a short-term play. Do not put liquidity in it you think you're going to need tomorrow. Instead of stacking sats, I would stack ENS.
Revenue generating business. All right, guys, on that note, we are going to wrap up episode 144 of the AM show. Appreciate everyone's time. I would give you a little bit of a rundown, but to be completely honest with you, we just started talking and it just ended up going for an hour. One of the things that I love about doing this show with FMC, and while the markets are down and things start to get boring, having these just good organic discussions is probably, one of my most favorite things. Obviously, when things are going up, you like to pull up as many articles, different projects, things that are launching that look good, and kind of do a deep dive into that. Always love doing that too. But, there's never an abundance of things to be talking about, things to be excited about, even though price gone down. But we really do appreciate you guys tuning in. Day in and day out, whether you watch the recordings or you're here every single day or you're here once a week. It does actually mean a lot to us, and that's why we keep doing what we're doing. Bug, thank you. We appreciate that. Thank you for everyone tuning in. Sandman, Sanchez, Cambo for chatting in the chat there and keeping the conversation going. Dekenza, of course, as always. Love you guys. On that note, stay tuned for the show tomorrow. Not 100% sure that it will be happening. I think so, but just 50-50 at this very moment. But of course, we will have more shows later this week too. We will make the announcements as needed, though. On that note, guys, good luck out there. Free market.
Good luck at the tables, D-Gens.